What is going on, guys? It is Brandon Buzz. I'm basically making this quick little video as an intro for my new channel, where I'll basically be talking about the stock market, the crypto market, the way the markets are moving, and certain recommendations I have towards certain stocks or certain cryptos that look like a good investment. They're primarily going to be based off my opinion. I'm not a financial advisor, but I do have quite a bit of experience in the market now, probably over 4.5 years. And recently I just started being very consistent and finally found my niche. So this is why I really wanted to make videos about it. And basically I just have a couple steps here just to get people started if they were curious, because I have a lot of friends, also family, who always ask me about, hey, like thought about getting in the stock market. How do I do this? How do I do that? And it just gets old explaining it. So I decided to make a YouTube, and it's just what I like to do. So it'll be really fun, and I'm excited for what the future holds with the YouTube. So step one to getting into the stock market, I would find a broker. Finding a broker is very important. You want to be with a broker that you're comfortable with, where you're comfortable with navigating through the app or the software on your computer. I use Robinhood because I've known probably Robinhood since it first came out, and I've just basically seen it through like its development. I've seen all the updates and how they added new features and stuff like that. It's been really easy to use. But I also have TD Ameritrade, Webull, and Fidelity. Fidelity just for a Roth IRA, but Webull and TD Ameritrade are some long-term stuff. So that's basically what you want to do first, is find a broker that you're going to be comfortable with. I'm going to recommend Robinhood, even though they've had some bad blood this year with the market and the short squeeze and everything that happened with that. The reason I would recommend Robinhood is because it's just so easy to use. Like, for somebody just getting into the stock market, I mean, use Robinhood for 6 months, and you can always not invest a lot and just start learning, and then maybe pull your money out and put it in a different broker if you weren't comfortable with Robinhood. So that's like the first recommendation I have, is using Robinhood for that reason. Webull, it's pretty easy, and the thing that scared me the most about Webull first is like all the charts and data they have. Like, they have all these little different types of data charts, and they can throw somebody who's just beginning into the market a little bit off. But Webull, I will say, if you were interested in trading options, Webull is definitely the way to go if you're worried about day trades, because we'll get into that in a different video. But Robinhood has certain rules and regulations that some other brokers don't have. So there's ups and downs with everything. We'll weigh them out in different videos. So that's basically number one: find your broker, and be comfortable with it. Number two is do your research before you get into the market. So if you're watching this video, you're already doing that. You're curious about what's going on in the stock market. You see all these people making all this money on social media. Social media is such a big influence. And I'll be getting into how social media affects us also when it comes to our markets and money and stuff like that, because I'm not a very big social media guy. I've never been. YouTube is going to be the most probably outgoing thing I've ever done in my life. But I will say social media definitely influences us to think that it's easy to get into these markets and make so much money. It's just the effect it has on the brain. And I really hope nobody listens to that, because it's exactly what happened with the short squeeze and everything. A lot of people came in, had a lot of FOMO, fear of missing out. They didn't want to miss out on the money. Everybody's making money. Everyone's happy. The reality of it is, a lot of people did not know what they were doing. They bought the stock high, and their money got swallowed immediately when there was a big sell-off or something in the market. So do your research and make like cautious and wise decisions in these markets, because if you don't, they're ruthless. Like, they will not have any pity on you, and that's when the mind games start to come in on, oh, well, should I hold it or sell it? Or then you sell it, and then it goes up, and then there's a whole bunch of mind games going into the market with what you should do when you're in a situation, when really there isn't a situation. It's all in your head, and if you develop the right mindset, you can beat the market every time. It's all in your mind. I want to say it's 20% trading and 80% mind. I always say that. That's number two, research. You're doing that. That's fantastic. Give yourself a pat on the back because you're making the right step. Number three, just also watching how the markets work. You got to watch how they move. You have to recognize when the markets dip, when you should buy in, when the markets, go up, when you want to sell. That's basically it. Number 3, you got to watch how they move and learn about it so you don't freak out when certain things happen. Number 4 on my list, you got to educate twice as much as you trade. So keep watching videos, keep learning about stocks, looking into certain websites, looking into news, CNBC. I don't watch the news, but you can go on CNBC.com and certainly see a lot of financial stocks and stuff like that, or financial news, about what's going on with certain companies. Fortune 500 companies affects the S&P, so it's good to always know about them, because if our economy is, dipping or something like that, CNBC is going to put it out there. They can't not. So it's good to know about that, so you know when to buy and then know how to make your money, or make your profits maximize. Number 5 is basically just a reminder to stay patient in these markets. It takes time to make money. It does not pay right away. And the more patient you are, the better off it's going to pay off. If you are antsy and you put all this money in and you really need it back, then you're not going to do well, because that's when emotions start taking over. You have to know when to stop investing and when to start investing. So if you do it at the right time, where you're comfortable with the money you're putting in the market, it usually works out very well for you, because you're not as emotionally attached to the money. Meaning, if you had $500 to your name and you put 400 in, that's not a very smart decision. That $400 could dip down to 200, and you're like, oh my gosh, I need this money so much. Why is it dipping down? I thought I was going to make money. Then you sell it because you're like, oh, I'm scared my $200 is going to go away. Well, a week goes by and that $200 you put in the market is now worth like $600. That's the mind games that come in. So that's all it is developing a mindset. And I have so many tips and so many videos I need to make on mindset training and how we can live a better life when it comes to balancing the stock market with our own lives, because it can take over, and it can get toxic real quick if you let it. So I have a lot of advice on mental health when it comes to the stock market, because it's a real thing, believe it or not. And that's it basically. Those are my 5 steps and my intro to my channel on getting into the markets. I have a lot of good stuff coming, and that's basically it. Thanks so much. Peace out. See you guys next video.